G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Please be sure to check out my links below, including exchanges I use and social media content that I post. All right, let's go. So the topic of this video, we're going over FedEx, particularly what happened there in the transportation sector in terms of its earnings. It just came out in the Friday session. Okay, for me it was in the morning, so yeah, it came out and it wasn't good. We'll also go over the savings rate, so an update on that and the consumer, and look at the probability for recession according to some analysts, and some charts of the Dow Jones. Okay, look at particularly the transportation sector and seeing how the Dow theory is actually playing out pretty strongly at the moment. Okay, so something to keep an eye on as we head into the end of the year and potentially recession following that. Okay, after the election potentially. Yeah, that's what I see happening. So anyway, we'll start with FedEx Corporation. Now we all know, love FedEx deliveries. Our deliveries on time, of course. And FedEx reported a steep quarterly profit drop and lowered its full-year revenue forecast on Thursday after its customers continue to trade down from speedy price delivery to cheaper, slower options. So the customers aren't getting the express shipping. The demand for that has definitely dropped off, and they're going for slower standard delivery options to cut costs for the products that they buy. So that is notable there. And you can see the stock price here, it fell 15% on the day. And that was pretty bad. Friday session, look at that. Went up from $300 down to $254. All right. So pretty significant drop in price in one day for a pretty solid company like FedEx. Okay, so and this is very important to note that we need freight companies who are doing well. If the economy is booming, if they start to do poorly, and then there's underlying restraint in the economy as, yeah, their earnings, profit, especially their guidance going forward, which I just mentioned, is being lowered. Okay, so revenues are being lowered, forward guidance, which is not a good sign coming ahead, okay, for the economy and potential recession. As you see, this is not a good sign. Shares in Memphis-based delivery giant tumbled almost 11% to 267 in after-hours trading, dragging shares in rival United Parcel Service down 2.5%. Okay, that's notable too. The shift to less profitable packages is squeezing profits at FedEx and UPS, while the latter pinned the blame on a flood of volume from China-linked e-commerce players at routers identified as Temu and Shine. FedEx pointed to a drop in priority shipments between businesses. Now, the CEO, Raj Subramaniam, said industrial demand was softer than expected. Shipments between manufacturers and other companies in that segment are the most profitable for FedEx, which is often seen as a bellwether for the US economy. The magnitude of the Fed the rate cuts yesterday signals the weakness of the current environment, Raj said, referring to the Federal Reserve's decision to cut interest rates by 0.5 percentage point on Wednesday. Raj is leading a complex restructuring at FedEx that involves slashing billions of dollars in overheads and merging its separate ground and express delivery units. Cost-cutting failed to offset the drag from the weak demand from lucrative priority services, one few operating day in the last quarter, FedEx said. And FedEx also lowered the top-end full-year adjusted operating income between $20 and $21 per share, the previous range of $20 to $22 per share. And the profit fell on an adjusted basis from $3.60 per share from $4.55 per share 1 year ago. So it's not good. And we have they're winding down contract work for the United States Postal Service, its largest customer, and expects $400 million headwind from the loss in contract in the current fiscal year. And it's FedEx's unprofitable USPS air contract, which accounted for $1.75 billion in revenue to FedEx during the Postal Service's last fiscal year, will end on September 29th. Okay. So, yeah, not a good sign for the upcoming economy. And, yeah, very worrying signs from the CEO. And he says the big cut for the Fed was a worrying cut, not a optimistic cut. So, very pessimistic. And he doesn't see good signs in the future. Especially from a year ago, it's definitely the earnings per share is slowing down. And, yeah, it's their contracts are not coming together. And they're losing out on them. You know, as I mentioned, the United States Postal Service and the UPS, which is quite a concerning factor to keep to an account. Okay, so FedEx is slowing down. It's not a good sign. And 15% drop. Come on, guys, that is not good. The backbone, we all need freight, and if they slow down, then the products getting to customers, you know, they're going to cut costs, and then people will just spend less, okay, as things get worse and worse, and they'll miss out on revenues, and then, yeah, the companies want to slash workers, so be more layoffs, and then you see the unemployment rate start to spike even higher. So it's a loop, okay? It's all repercussions from slowing demand. Right, so we have capacity data now. Americans are officially out of savings. US net savings as percentage of GDP by household, businesses, and government have been negative for 6 consecutive quarters. In other words, Americans are producing much less than they consume. Since 1947, there are only 2 other times when savings were negative, 2008 and 2020. This comes after US government's deficit hit $2.1 trillion over the last 12 months, with spending reaching $6.9 trillion. At the same time, personal savings rate fell to 2.9%, the second lowest since 2008. Okay, 2022 was the other time that was this low. National savings are at crisis levels. Here it is here. US economy now relies entirely on foreign net savings. Okay, so you can see it's coming down. And yeah, it's not good. Foreign net savings in the US are declining, and US national net savings are bad too. So it is very, very worrying signs that things are on the downtrend, especially from the 1960s. It is declining rapidly. And, you know, when we go negative like this, we had a great financial crisis. We went negative in 2020. We had a recession there. And we didn't quite go negative in this recession, in the dot-com bubble. But, you know, these things occur, and it's looking quite grim, right, for savings rates. And, yeah, even though the deficits is going up, we're still seeing people cut back. The government's spending like crazy, but people aren't spending, and they're really, really tight for savings. And it's at the second lowest since 2008. As you can see here, it's red here, is lower than 2020, and this big decline here. So we're back to the GFC period, which is not a good sign. Okay, so there's people running out of savings, and they're not going to go speculate in the stock market, right? So there's not much room to go, and this really just demonstrates that. Okay, so very, very bad. Now we have another chart. This one talks about the probabilities for soft, hard, and no landing, according to recession. So a soft landing will be no recession, hard landing will be recession, and then a no landing will be completely avoided altogether. And markets just continue its rip higher and shrug it all off. Okay, so we have the red is hard landing, the blue is soft landing, and the green is no landing. And the probabilities have sort of shifted slightly. So you had this, you know, percentage here, hard landing. There was a more probable outcome in May of 2023, and you can see the trend up. There's now 11%, so less people are predicting a hard landing. And more people are suggesting, see, especially from May, 63% to 79%, soft landing, and then a no landing is 7%. So that's sort of staggered. Okay, went up high here in April 2024. Now it's sort of come down, but yeah, the soft landing narrative is floating around everywhere, which is quite concerning that majority of people think that. Okay, so if you combine the no landing and soft landing, we have 89%, or 79 plus 7 is 86%, I should say. But it does make up 100%, which is quite unusual. But you see the majority of people are thinking no recession at all. You know, 10% or so are saying hard landing recession. So I'm in the minority camp. And yeah, usually you got to be contrarian in these times. When everyone's pointing one direction, you got to go the opposite. And it usually plays out in your favor when you're a contrarian. So it's concerning that the majority of people are shrugging off a recession, okay, in the next 12 months, okay, so next 12 months. And this is global economies, okay, not just US, this is a global economy. Now, this is for the US economy, and the no recession in next 18 months is at 52%, okay. So, yeah, quite concerning there that, so the US, there is 52% chance no recession, okay. And then, yeah, it just goes down, down, down. So that's that data there, that it goes down the halving 2025, and then sort of first half 25 and second half 25. And the chances of it happening is a sort of 50% chance, essentially, according to Bank of America's research. So that is that. Okay, now we're looking at the Dow Jones transportation average. So we see a big nasty candle here on the daily, and 3.5% down on the day due to FedEx mainly. That's transportation. And that's a nasty candle. It's really bad. We didn't break this resistance. Sort of slightly did with this candle here, and then bam, we just rejected. So you can see this triangle has been formed from end of 2021 to September 2022, and then sort of started to consolidate here in 2023, August, and then October, November, and then, yeah, it's starting to really, really squeeze. It's squeezing, and it did look like it was going to break out and continue bullish, but that is not the case now. We're back in this triangle again due to the FedEx poor guidance, okay, and earnings. And, yeah, it looks pretty negative. And what you could do is sort of switch to the weekly, so it's a little bit more concise and neat. You can sort of see it a bit more clearly, the touches, okay, from these trend lines. And we did sort of break out and fake out. And now you got this nasty looking candle here on the weekly, which suggests that it could potentially reverse back down. And yeah, this is not good for the stock market, okay. So stock markets will diverge and they're going higher. But the Dow Jones is going, and especially transportation index is going down. It's middle range. It's sort of in the between. This up period, this down period, it's in the middle. It's indecisive. It just has to decide where it wants to go. All right, at the end of this year. So what you do is you overlay the Dow Jones Industrial, all right, the infamous, what we all know and love. Okay, and you can see in red, there's a Dow Jones Industrial. All right, see them out like this. You can see it tracks it very nicely. All right, here, to 2022, that was down period. The Fed was fighting inflation, and obviously they tracked each other really well here. And now, we see the Dow Jones Industrial made a high compared to this one. So it did go up, right? But what happened here on the transportation average is it actually went down, and it's been going down again. So it has struggled to make higher highs. It's going lower on the high front, but the higher lows are continuing. So it is squeezing, right? But then you got the Dow Jones Industrials going higher. So we're getting divergence there. So one's going down, one's going up in terms of highs, not lows. Lows are going high, but the highs are going lower. There is divergence there, okay? There is a gap. It's widening. And that is Dow theory, okay? When there's a divergence between the transportation average and the industrial average. If you go back in history, you know, it's not perfect. It's not the best thing, but, you know, you can see that there are, you know, it is correlated here. Okay, they're very correlated. Very correlated. They both drop at the same time. They're both sort of, you know, very, very correlated in lockstep there, as you can see. And then eventually, when you start seeing the industrials, or I should say the transportations go sideways and the industrials go up, okay, there's a gap, okay, there's a separation in movement, and that occurs, and then eventually you see declines, okay, that's Dow theory, all right? And then you go back in history, and, you know, we got this divergence that play out here in 2015, so we had, they were both going up in lockstep, of course, they're all going up very nicely, and then you saw it go down. The transportation start to go down, right? Meanwhile, the industrials are actually going up. See that? One's going up, one's going down, and then eventually they both came back into correlated state, and they both dropped. Okay, so that happens from time to time. Sometimes it's not 100% accurate. So we had times where, you know, this transportation was going slightly down, as you can see there, and the industrials were going up, and then they both just went up. Okay. So it doesn't work every time. That's what I'm trying to say. It's not a perfect indication that we're going to hit major downside concerns. Okay. And yeah, there's the GFC there, and it was a bit, they were both going down and then up, but one was making a slight high, which is the transportations, while the industrials were going down and making a lower high. And this was equal highs, okay, and eventually they both went down, but yeah, not huge divergence there, okay. And the dot-com bubble, all right, so you had but they were both sort of going up in lockstep there, as you can see here. It was pretty correlated, and then they both went up and made that one struggled. Transportation average struggled to make a higher high, just made it, as you can see there, and the industrials just ripped higher, okay, and then continued to go higher, right, as you can see there, while this topped out and continued to go lower. So see, there's divergence there, and then eventually they both sort of went sideways, essentially. If you can see there, they both went sideways and did nothing, and then they went back into lockstep again, and they both went down, okay? All right, into 2003, right? So there's times where it works, times where it doesn't, and you can go back even further, okay, if you want to. See, they're nice and correlated here, and then eventually this one goes down, transportations, but the industrials just go flat, and then they go up. All right. So yeah, it's not a bearish signal always. It can be bullish as well, as I showed you here in the 90s. Here was more bearish. Okay, they diverged, and then they went flat. And then when they went down, you can see the dot-com bubble, and then they diverged. One went flat, and then they went down in the GFC. So bearish again, but in the 2012 period, they diverged. The industrials were going higher, and the transportation was going down, but they went up. Okay, so one went down, one went up, as you can see here, and they went down in 2015. And then sideways, up, slight divergence, not much. And the gap widened, and then boom, pandemic drop. And then right now we're seeing a big divergence. One's going up, one's going sideways and down slightly. So will it play out the downside or upside? And then the transportations catch up to the industrials, or the industrials come down to meet the transportations and then head down. Okay. And to potentially these lows, 12,000, 13.5, got these levels marked out. And we find a bottom in the recession around these levels. But yeah, it's only time will tell. But yeah, FedEx is warning of further weakness in revenue numbers. So potentially further weakness in the transportation, as FedEx is like the largest. UPS and those other ones are pretty big too. Okay, so you can't discount them because they are the backbone of the economy. Essentially, the transferring goods from companies to consumers. Okay, so that is important to note, and you have to be prepared for any outcomes, any changes. But for now, it looks pretty grim, this outcome. And if they're going to come out with less revenues, the layoffs will probably amount to offset that, okay? And then the layoffs continue to go up and revenues go down, stock prices go down, and obviously this goes down and everything goes down. Stock market goes down, crypto market goes down because, yeah, it's goods and services. Consumers' spending is really getting tight and savings rates are low. So it all works together and results in a recession, okay? So that is that. So I hope you enjoyed this video, just going over FedEx, the topic of this video, and their earnings came out in the previous session, Friday session, the stock market, and they weren't good. And the CEO warns of further weakness ahead in terms of revenue and the contracts not going as planned and potentially getting cancelled. So, yeah, it's not looking quite positive for them. And then you'll see layoffs result as well because they're missing out on revenue and they're cutting costs. So they'll lay off people, unfortunately. So the unemployed people will rise, the unemployment rate will go up, and the recession will be underway by then. And potentially you see this into the end of the year or next year. All right, start next year. So it's very, very soon. And yeah, the stock fell 15% on the day, which is quite very, very bad. Big company like FedEx. So worrying signs. And the Dow Jones Transportation Average did fall 3.5%. Right. The overall basket of transportation stocks went down. And the industrial average actually didn't go down. It's quite positive. So there is a decorrelation there. Basically, divergence, should say. One's going down, one's going up. So we're going to get wider and wider and wider. And this Dow Jones, it's called the Dow theory, is starting to play out in front of our eyes. And which one will be right? Will the Dow Jones Transportation head lower and bring down the Dow Jones Industrial Average, or the Dow Jones Industrial Average bring up the transportation? And it's just a head fake and just a one-off bad earnings report for FedEx. Okay, so that is that. And I looked at the savings rate. It's very, very low. It's like at 2008 levels, GFC levels, 2.9%. The US citizen, so that's pretty bad. And yeah, we looked at the hard landing, soft landing, and no landing probabilities, and they're coming in the mid-80s percentage of people saying that there's analysts, according to Bank of America, suggesting that the likely outcome is no recession at all. Okay, so yeah, the majority of people are saying that, and that is a concerning sign when the majority are flocking towards higher stock prices and stronger economic growth ahead, when you can clearly see that under the curtain, behind the curtain, all this propping up of the economy and the Fed cutting rates aggressively is actually not a good sign. It's covering up what is happening in reality and what the everyday person is feeling, and what the earnings going ahead are looking like is not quite good for further projections. And that's not just for FedEx; it's also for like Walmart, for like other companies not looking forward to positive earnings, like Starbucks and many other companies, Subway, and you can go on and on and on. List, and they're all looking pessimistic in the future, according to what they see in forward guidance. Okay, so that is that. And yeah, so let's look out for those things in coming up into the end of the year. But I don't see much bearishness up until the election. And after the election's over, and we can really see its decline, and then fall into reality. So bad news become bad news, and good news be good news, but be more bad news as economic conditions weaken. And another thing we'll look out for too, especially next week, is the final GDP numbers for the US. So that is crucial that we see it continue positive. If it does go negative, then I do believe from this negative reading that we are entering recession. Okay, if it stays positive, then recession is delayed. But if it starts negative, then that was when I would turn pretty bearish. Okay, if we get negative GDP numbers, that'll be the start of the decline and big correction, and potentially a big crash. We'll have to see how bad it gets, but yeah, because it looks like the economy is quite strong at 3% GDP, but yeah, it can always just go negative. It's 1.4% before that, and now it's 3%. If it goes down, that is completely likely. Okay, because you got to see those things for what they are, right? And don't think that we're in an uptrend and it's continue up. It can just reverse just like that. So yeah, look out for those things. And next week's gonna be really interesting GDP numbers, and I believe PCE is coming out as well. PCE inflation numbers. So that is what to look out for next week. So if you enjoyed this video, please smash the like, comment your thoughts below. Sure to subscribe to stay updated, and check out the links below as well. And I'll catch you next one. Cheers.